Ladies and gentlemen, welcome to Mersen 2025 full year sales presentation. The webcast will be structured in two parts. First, a presentation by the Mersen management team. Afterwards, there will be a Q&A session during which you may ask questions in two ways: by submitting a written question in the box below the player, or by clicking the green hand button on the player to ask your question orally. I will now hand over to Mrs. Boca. Madam, please go ahead.
Good morning and good afternoon to everyone, and thank you very much for joining us today. For your information, this call is being recorded and a replay will be available on the investor section of our website at the end of the call. So as it has just been mentioned, a Q&A session will occur after the end of the formal presentation today with Luc Themelin, our CEO, and Thomas Baumgartner, our CFO. I will now turn the call over to our CEO, Luc Themelin.
Thank you, Véronique. 2025 was a busy year marked by a contrasting global environment, and we can say that Mersen delivered a solid performance under these conditions. 2025 was not a uniform year across our markets, but it was a year that clearly demonstrated the resilience of our portfolio and the relevance of our global and diversified footprint. Reported sales for the full year reached 1.186 billion euro, representing an organic decline of 3.2%, which is at the high end of the guidance we communicated in October. We face strong headwinds from exchange rates, with the US dollar and the RMB representing two-thirds of the total exchange rate impact. I would like to stress that these are only conversion impact, as the group is global with an industrial presence where it sells. Throughout the year, we achieved strong momentum across several key markets: wind, energy storage, power electronics, aeronautics, rail, and electrical distributions, to name the most important. This helped offset the weakness in the solar and silicon carbide markets that I've already commented on in our previous calls. I will now turn over to Thomas, who will go into more details.
Thank you, Luc. Hello, everyone. So as you can see on the slide, the sales evolution over the year was impacted by several factors. So the first one is currency effect. As Luc mentioned, the depreciation of the Chinese renminbi and the US dollar, to name the most important ones, had a significant impact on the reported figures, amounting to approximately 40 million euros for the full year. This was partly offset, or totally offset, I would say, by the scope effect. Our scope effect reflects the contribution of the acquisitions made in 2024 in the US, and also compensated by the pricing power. We reached to increase the price by 1.5%. The effect is 1.5% for the full year. Regarding the business performance, we had a strong commercial successes in a number of our markets. We'll come back to that later on. And conversely, softer market conditions in solar and SiC semiconductors, mentioned by Luc earlier on. So all in all, we reported full year sales of 1.186 billion euro. And now we can see markets by markets what happened. And my first comment is to say that our diversified end markets provide us a good level of stability, and we could compensate a sharp decline in solar and SiC semiconductors. And as you can see, we had positive momentum in other markets, fueled by strong drivers, as mentioned on the slide. First, stable and solid growth in wind and energy storage. We benefited also from a return to more stable condition in the SI semiconductor markets, with the second half of the year much stronger than the first part. We benefited also from a strong growth in power conversion, supported by significant contracts for HVDC lines, underlining our positioning in large-scale grid investments. We had also a continued growth and strong growth in aeronautics and rail. We see also some stable markets, are typically EV markets. We had which was stable, reflecting two opposite, I would say, trends. From one end, a growth in vehicles, and from the other end, a decline in charging infrastructure. And then we benefited also from a very strong year in electrical distribution. So many markets doing well and in growth. And from all what I said, it represents almost 60% of total sales. The rest, the remaining part, concern process industries, chemicals, and conventional energies, which were globally flat compared with last year. So if we break down by this performance by geography, I will start with North America, because it's by far the largest area in terms of revenue. As you can see, we were resilient with a growth of 0.7% despite the very weak demand for SiC semiconductors. On the other hand, Asia suffered from a decline of 13%. The region was strongly impacted by the solar market in China and weak deliveries in chemicals. And in the middle, I would say, Europe, the decrease is a combined, but limited decrease, is a combined result of strong performance in HVDC lines, aeronautics, and rails, which was more than compensated by wind markets in process industries, SiC semiconductors mostly. So if we look now by segment, starting with electrical power, this segment experienced growth throughout the year with very strong drivers being rail, wind, power conversion, and electrical distribution in the US. On the other hand, you can see that advanced material segment is in decline, affected by a sharp drop in solar and SiC semiconductor, as already mentioned. We had also, but to a limited extent, a small decline in chemical and process industries, which was in line with our expectation. And this was, to a certain level, compensated by dynamic markets such as aeronautics, wind, and rail. For the fourth quarter, we experienced a minus 0.5% organic decline compared to minus 4% in Q3, so it's a significant change. This translates into a 2.2% sequential improvement in Q4 compared to Q3. We had also this quarter impact of exchange rate, which was more significant, I would say, this quarter than before, amounting to minus 18 million euro. Just to remind you, the dollar against euro was at 1.05 at the beginning of the year, and it was an average of 1.13 over the year, and I would say almost 1.16 or 1.17 in the last quarter. More generally, dollar was the most significant impact, but we were also impacted by the appreciation of euro compared to most of the currency. If we look at regions, Europe had been quite resilient this quarter, with good momentum in chemicals, grid, wind, aeronautics, and rail that compensate for the decline in semiconductors. North America performed well with a growth close to 3%, especially thanks to electrical distribution, still very strong. By segment, electrical power performed well over the period, thanks to strong momentum in both power electronics and electrical distribution markets. Advanced materials sales were down by 6.6% of the quarter, with strong growth in wind power, aeronautics, and rail markets, but still a sharp decline in solar and SiC semiconductor markets. I would say less SiC semiconductor market this quarter compared to solar. I now turn over back to Luc.
Thank you. Now for the full year, we can be more specific. Current EBITDA margin remains at around 16%, similar to what has been disclosed in October. Current operating margin will be around 9.2%, in the mid-range of the guidance disclosed in October. And finally, we have managed to reduce again the CapEx level, which will end up being around 135 million euros. I would like to conclude with a few words on 2026. You know that we will disclose our full guidance on the 18th of March, so we will not answer precise questions on guidance at this stage. But I want to underscore an important message. We are focused on CapEx discipline, as was the case in 2026 already. We will continue to reduce CapEx in 2026, and this should bring free cash flow back into positive territory in 2026. All the elements we have discussed today are fully consistent with our 2029 roadmap. Despite the challenging and uneven market environment, our strategic priorities remain unchanged. Our roadmap is built on structurally attractive end markets such as electrification, energy transition, clean mobility, grid reinforcement, and advanced technologies, which will continue to drive demand over the medium term. Our margin ambitions are based not just on market conditions, but also on the key levers at our disposal: pricing discipline, portfolio mix, and operational efficiency. Moreover, we are also focused on being selective in our CapEx and discipline with working capital to improve free cash flow. Taken together, this gives us confidence in our ability to deliver on our 2029 ambitions.
So if you have questions, please, it's the time for questions.
If you wish to ask a question, you may do so in one of the two ways: by submitting a written question in the box below the player, or by clicking the green hand button on the player to ask your question orally. We have a question from Thomas Renaud from Kepler Cheuvreux. Please unmute your mic. Go ahead. Mr. Renaud, we can hear you. Please go ahead. Thomas Renaud, please unmute your mic and please go ahead with your question.
Okay, I will go with the question that we have received on the platform. So the question is: are you present on the data center market, and what is the level of sales in this particular market?
The answer is quite difficult to give you in a precise way, but yes, we are, because we have customer delivering the data center in terms of electrical protection. It's easy to find through the distribution. And indirectly, as you know, there is plenty of electronics, power electronics in data center. We are in, but it's more difficult to identify. And the trend of this market is easy to see, I would say, 2 years in our fuses business. And still good. I would say 26 will be nice as well.
It explains partly the growth. We had the very, very good stuff.
In North America.
Yeah.
So one other question is, can we expect a rebound in SiC in 2026, and the same for solar?
We don't expect a big move in silicon carbide in 26. We see more something happening in mid-27 at this stage of our knowledge. The solar is more difficult to answer because there is a situation in China not easy to understand. I guess you read already some result from some Chinese company like Longjing. They are not in good shape. They are not profitable. It seems that this market is trying to be reorganized by the Chinese administration soon. We will see, but we don't expect something extremely booming in solar this year.
So more question, and I will read because it's quite long, the question. So NVIDIA and ecosystem partner are transitioning data center power distribution to 800 VDC architecture to support megawatt scale AI racks, starting in 2027. How is Mersen positioning its product portfolio, particularly liquid cooler busbar, power distribution blocks, and cooling distribution unit to capture this opportunity? More specifically, are you currently engaged in design win process with hyperscalers or tier 1 OEM for 800 VDC infrastructure? Can you quantify the potential revenue opportunity per megawatt of installed 800 VDC capacity versus traditional 54 volts 400 VAC architecture? What is your expected commercialization timeline, and when do you anticipate meaningful revenue contribution from 800 VDC related products?
The question is coming from Mr. Gilles Chauffeau. I read that. We need to hire you because you are extremely good in your question. First, on the power conversion in the data center, I think we will cover this new, I would say, specification. I don't think that they will need more liquid cooling busbar or cooling device in this case than before. About the question about the voltage and the fact that they will move from AC to DC, it should help a little bit the fuse technology because the breaker at this time cannot really cut the current in the DC shape. But as well, because we see NVIDIA on your question, people are working on a solid state breaker, and it's more in the end of company like Schneider. But we are quite happy, not only on data center, to see the direct current coming in our market because it's more interesting for Mersen than the AC. But in short, because
so now we have the question from Thomas Renaud that was not able to ask his question directly. Could you share with us the group like-for-like performance in Q4 excluding the solar and SiC markets?
Yes, in the Q4 it was between 5 and 6%. I don't have the precise figure. In H1, if my memory is correct, it was 3%, something like that. Yes, far better than in Q1.
Any reason why the operating margin is expected to be at the low to mid-range of the guidance, while like-for-like growth came at the top end? Is this driven by potential FX effects?
In fact, when you remember, we changed our guidance of sales at the beginning of in October. We didn't change the operating margin, which was large, in fact, and we are in between. In fact, this is totally consistent with the fact that we have lower sales than that at the beginning of the year. We have a better margin. We have the mid-range of the margin. We are resilient in margin, and this is especially due to the fact that we have lowered the CapEx, so we have lower amortization.
Could you elaborate on the dynamic in the process industry in Q4 and how you see this segment evolving in 2026?
Q4, it was a little bit different between the electrical power, which was really tremendous, very good, I would say, especially, but we said data center typically, and it was not so good in advanced material segment, however, not so bad as well. Difficult to predict in 2026. Why? Because it's driven by the macroeconomy, by the industrial GDP, and as you know, in electrical distribution, even in the trends, in more electrification, more grid storage, etc., you need more electrification. So typically more of our product. We know as well that electrical distribution, the time to market is quite between the order and the sales are quite quick. So it's a bit difficult to predict today. I can't say more. Maybe we'll say more in March.
So now we'll go with the. I think there are some questions on the phone, if I can say.
So now we have a question from Giovanni Salvetti. Please, sir, go ahead and unmute your mic.
Can you hear me?
Yes.
Hello, everyone. Thanks for taking my questions. I think I missed the first 5 minutes, so maybe you already said that. But I have 3 questions. The first one is that if you can, in a way, break down this price increase across division. Is it mainly price increases in electrical power, or is it across the whole firm? The second question is, if I look at your slide, I can see that the silicon carbide accounted for 5% of total sales in 2025, which means basically 59 million, which would imply a fourth quarter of 20 million, which is quite above what you reported in the past quarters. So I was wondering if you can explain why it have kind of accelerated in Q4, and what is a rough range we can expect for 2026. And the last one is on CapEx. Is this reduction in the CapEx related to, let's just say, a growth that is lower than what you had in mind, or is just because you think you can deliver the same growth with lower CapEx needs?
Okay, I will start with the price. The pricing, it's more important in electrical power than in advanced material, and more important in the US, as you can imagine, than in Europe and in Asia. And in fact, you certainly note that we have the pricing is the pricing effect is more important in Q4, especially because we have some tariff, but it's limited, and we totally covered this tariff increase by pricing. That is the first question. The second one.
Silicon carbide.
Yeah. So the silicon carbide, in fact, when we say 5%, it's about 5%. If you want the figure, it's around 55 million euros for the full year. And yes, the Q4 was better than the Q3 with around 15 million euros, not 20, 15. And in fact, it's yes, we said that it will recover
Slowly.
So maybe.
No, but it's quite difficult to explain by the number because we have mainly 4 or 5 main and big customers. All are not at the same level of inventory coming from the past. That means one is asking a little bit more end of the year than the other. But at the end, the average will be a little bit better in 26. But we had already discussion before. We don't see a dramatic increase on silicon carbide demand next year. The CapEx.
But we see a growth.
We see a growth.
We see a growth.
The CapEx, we could deliver more, but as you may know, we invest quite a lot 2 years ago, I would say, to reach the demand that everybody were asking us. It means a huge demand in silicon carbide, but since this date, this demand decreased quite a lot. That means we have started to invest, and considering the demand for the next 2 years, we decided to reduce as much as possible, but most of the CapEx was already spent. This is why we try to be focused on having less and less CapEx, but the amount is still high.
Okay, thank you very much. Thank you.
As a reminder, if you wish to ask a question, you may do so in one of the 2 ways: by submitting a written question in the box below the player, or by clicking the green hand button on the player to ask your question orally.
So I will continue with the question we received. So can you confirm the organic growth for the full year without solar and SiC?
Yes, it's a little bit. It's less than 4%. It's between 3.5% and 4% for the full year.
Then the second question is with a low level of CapEx at 135 million euros. Can you forecast a free cash flow close to break-even in 2025?
You remember that I said that it will be difficult to reach a free cash flow in 2025, and I think I will make a teasing. I don't know. We'll give some idea in March. So you will wait for that answer.
One more question on SiC. I read the question, but I see this is not a confirmation. Could you confirm that H2 sales in SiC are superior to H1? I can answer that it's not the case. We didn't say that. We say, and maybe it was not clear enough, that for silicon semiconductor, H2 was superior to H1, but it's not the case for.
In SiC, it's more or less stable between H1 and H2. But in H1, we benefited from in Q2 especially. Remember, we've done a very good Q2. In fact, we benefited from some I would say payments from customers in the frame of the renegotiation of our contracts.
So one more question from Bruno Hertz. Are you still working on the Smart Seek project?
Yes, we are still working, but I'm not sure that. But you have behind the question, the market at the end is the same as silicon carbide, Smart Seek and silicon diamond, the same end market, EV. And it slowed down like the silicon carbide. And in terms of commercial activity, I would say in Soitec, it's not they are not very busy. But in Mersen, we still have some things to do in a technical aspect. The next 6 months to be absolutely ready to supply. So I think yes, we are still working. We are still starting equipment as a schedule.
So one more question from Timur. Once you have completed your committed capex program, how much more capacity will you have as a percentage of 25 volumes?
We need to come back maybe 2 years ago because we did already this announcement. There's a big part of the capex on advanced materials because we have few on the electrical side. We have to address the silicon carbide demand, and we decided to invest to move up by 4,000 tons of isostatic graphite to cover this market at the beginning. And this is always the possibility of the group. Now we need to see this demand coming back. And at this step, we have quite a lot extra capacity to address this market.
Yes,
cannot answer in percentage really.
I would say 30% or maybe a little bit more of available capacity.
So I don't have other question on the platform. So maybe no more questions.
As a reminder, if you wish to ask a question, you may do so in one of the two ways: by submitting a written question in the box below the player, or by clicking the green hand button on the player to ask a question orally.
So if no additional question, we look forward to seeing you on March 18th for the full year result. It will be in Paris. So if you are in Paris, you can join the meeting in person at 10 a.m. It will be at la Maison des Travaux Publics, rue de Berry, in Paris.
Easy to find.
Thank you very much.
Thank you very much.
Thank you.
Nice evening.
Bye.
Nice evening.